Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hi, everyone. Thanks for joining us. This is the RIA Edge Podcast. I'm David Armstrong, the executive editor at wealthmanagement.com. As you know, this is the podcast where I get a chance to speak to executives at RIA firms that, in our consideration, are growing by design and not by default, not simply wafting upward on the backs of asset appreciation, but making considered decisions on how to grow a firm as an executive, as a professionally managed firm in the RIA space. And today I'm thrilled to be joined by Dick Pfister, who is the founder of AlphaCore Wealth Services. Dick, thanks very much for joining us.
Thanks for having me.
For the folks who don't know, do you want to just give us the quick background on AlphaCore, who you are, assets under management, client profile?
Of course. Again, thanks for having me. So I'll give you the quick kind of elevator story of who we are. We are a wealth advisor that's headquartered in San Diego, but we do have a few offices across the country. We're about $3 billion in assets, focusing on high net worth and ultra high net worth clients. We do full wealth management and wealth advisory. We do have an emphasis or a unique value proposition that we incorporate alternative strategies right alongside traditional equities and fixed income. And I launched the firm about 9 years ago and have really grown from zero to where we are today based upon the talent and the team that I brought on. And then through that, most of that growth has come through organic growth up until recently, where we've done a few strategic acquisitions. And that's where we are today.
Yeah, that's fantastic. I think I know you as the one of the founding partners of Altegris. Mm-hmm. Which was the alternative asset management shop, long running, successfully sold that to Genworth, I think.
That's right.
A while ago. And it, kind of an interesting story that we had on our site, our reporter Ali Hibbs wrote, you were really looking for a solution after that windfall. Mm-hmm. Explain to me where you were at that position. Maybe take us back to Altegris a little bit and what you were doing there.
Sure. So. Yeah, that's a good starting point. I guess it'll be that's the genesis of AlphaCore. So what we were doing at Altegris, which was a platform to access best of breed alternative strategies, we launched that firm in early 2002, and the core of us were together even before that. So at the time, there really wasn't access availability to these types of strategies on a public website, for example. This is before the advent of iCapital and the rest of the other platforms that are out there. So we were in the world of democratizing access to alternative strategies. We didn't believe that those types of high quality, good risk adjusted returns should only be available to pensions and endowments. We thought if you're an individual or high net worth, that you should have access to that too. But we didn't think that people should be doing that on their own. They should have a research team, qualified experts to help find them, source them, monitor them, and then create the vehicles to get in. And that's when we launched our previous firm. So we grew that firm from a few people to about 150 people on staff. Dedicated research group and internals and externals that would take those managers out to other independent wealth advisors. Because if you're an independent wealth advisor that launched an RIA, left, let's say, a bank or a wirehouse where they had internal alternative platforms, when you go to launch your own, you didn't want to necessarily do that same thing on your own, but you needed the access to service your clients. So we fit really well into that niche, and in that time window, kind of 2002 to 2013, 14, we were really the only independent player, an independent platform in that world.
I was going to say very, very early into that sort of what we, I guess, now call the democratization of alts. You were early in that.
That's right. It was, it's funny to talk about now, but really putting a private placement on a public website was completely unheard of back in 2002. It sounds kind of commonplace now that you can go in and log in and, put in your net worth and your requirements. You get to see something. But back then that was cutting edge. And I was fortunate to have three incredible partners that were very innovative, and we kind of pushed the edges of the envelope to make sure that got done. And to this day, some of these other large platforms use some of the no action letters that we had helped craft with the SEC. So that was innovative at the time. And like you mentioned, we ended up selling that firm to Genworth and eventually to 2 other private equity firms. So I had a personal liquidity event, but I was still working full time. And so what I said was to my wife, I said, let's sit down with some really well-known wealth advisors in San Diego and say, hey, what would you guys do with these assets while I continue to work? And sat down with kind of the who's who of wealth management in San Diego. And what I found pretty quickly was they were very good at, I'll call it financial planning 101. So gathering data, looking at your assets, looking at your expenses, potentially saying, do you need a trust? Do you have a trust? These typical wealth planning goals and objectives. And so as I sat down with these different wealth advisors, most of them were giving me kind of the same type of recommendation on the planning side, which I believe is kind of the table stakes to be a good wealth manager. You have to do that part very well. But when it came to reaching the goals of the plan, let's say it's a target return or some sort of return, let's imagine high single digits, low double digits. If you could only reach those numbers over time, then you're going to be fine. You're going to outlive your money, right? That's the typical answer. Or if you're spending more than you should be, they're going to give you some recommendations about not doing that. But if that's the answer for a high net worth investor, the solution to get to those returns, I felt, was outdated and antiquated, because most of the solution was, we're going to put 60% of your money in stocks and 40% of your money in bonds. And ironically for me, I thought that was too risky. And I was in my early 40s. And if they were recommending that to people in their 60s and 70s, I thought that was a recipe for disaster. So I'd lived through, obviously, 98 crisis, long-term capital. I lived through the tech wreck. I lived through the '08 crisis. And I thought, okay, well, if I'm going to put 60% in long only, I better be ready for every 5 to 7 years, a 30 to 50% correction. And at the time, interest rates were extremely low. So is either dilutive to have in your portfolio, or if rates were to rise, then you'd have a problem on your fixed income side of your portfolio. So I literally sat down with my wife and said, okay, what we're going to do is we're going to put diversified alternatives in the core of our asset allocation. And we won't pick just one manager or one style. We'll pick multiple managers and multiple styles. And that will include things like alternative asset classes and alternative strategies, which we can talk more about if you want. But that would be the core, and that'll be the ballast of the portfolio. So that could be anywhere between 10 and 30% of a portfolio. It's going to be our all-weather piece of the portfolio, hopefully making money regardless of whether we're in a bull or bear market. And then around that core, we'll put traditional long-only beta. So we'll put long-only equities, because I'm still a very big believer in innovation and creativity of the companies across the world. And then we'll put in traditional fixed income to generate income if we need that. So there was alpha managers at the core and then beta around the alpha. And that's where the name AlphaCore came from. That was, my wife said, if you're going to launch a firm and this is what you want to do as the investment philosophy, you should probably use this as a name. And it really stuck at the time. And so subsequent to that, we've used this idea of alpha across everything we do. So it's not just alpha in an investment related sense, it's alpha across everything. So you can generate alpha, tax loss alpha, but you can also generate customer service alpha. You can do financial planning alpha. You can, everything that we do as a full-fledged wealth advisor, you can do it better than the average. And that's kind of our mentality at AlphaCore.
Yeah, it's interesting. It's first of all, at the time, right, this was unique, I think, in the, for lack of a better word, retail wealth management space. And the idea that has come along since is using alternatives as kind of an overlay of the portfolio, but you build from the alternatives at the center.
That's right. So I think what happens a lot of times is if you come from the capital market space, or you come from getting your MBA or even your CFA, you start from the traditional world and you build forward and you bolt on alternative strategies as the end, right? So you're saying, okay, I'm going to have stocks, I'm going to have bonds. I know I'm going to have those. Now, what else fits on the outside, kind of on the outer edge of the pie, if you think of it that way? we start from the other side of it and say, okay, we know we need to have diversifying non-correlated strategies at the core. And then how do we overlay the stocks and the bonds so that we're not doubling up on the risk factors? So I'll give you a good example of that. Let's imagine, which a lot of clients do have this, they have a lot of growth in their portfolio. That's in their long only stock portfolio. And you can think of the Magnificent Seven, you can think of all the names that people know. But when they come to us, they have these exposures. If we say, well, we'd like to diversify that. You've done well in those, but we think we should add something that has downside protection potentially, or something that can actually zig when the others zag. We can't go at a long short equity manager that also trades in growth stocks, right? You have to have, and that does happen a lot of times where somebody puts in, well, it's long short, so it should be able to make money when that sector gets hit. That's not necessarily always the case. You've got to be more intelligent about that and say, well, we should probably get a manager whose expertise is, let's say, value stocks on the long and short side. And that's the way we look at intelligently allocating to the world of alternatives. And you can do that across every sector, whether that's private credit, private equity, private real estate, or the alternatives or hedge strategies.
Mm-hmm. So you, and we'll get there to talk a little bit more about the alternatives, but so you have a differentiator in an investment philosophy that you're coming to the market with as a newly formed RIA, solving a problem that you had, thinking that this could also maybe solve a problem that other people have. What was your first step in terms of client acquisition? I mean, how do you go from hanging out the shingle? I mean, you were not unknown. Folks knew who you were. Kind of going from that investment research side to, I'm now going to be the financial planner, the wealth manager, hung the shingle out, form ADV. What's your first step?
Yeah, it reminded me of those early days, which is they're fun and somewhat stressful, but I started my wife and I started as the first clients of AlphaCore. So as the first clients of AlphaCore, we said, okay, we've got this investment philosophy, but what do we need around that? Because that's only one side of what we do. And I said, well, I want to have best of breed in every part of what a wealth manager can do. And that means I need wealth planners and financial planners. So I needed to go find CFPs, planners to bring on the team so that when we go to allocate the way we want to allocate, we've already determined the goals and objectives of our clients. So I went and brought in a talented team on the wealth planning side, and then brought over some research team that I had known for years as well. And then said, okay, well, also as a high net worth investor, what else do they want? Well, they want really good customer service. They want the phone to be answered, the emails to be answered. They want rapid response. So invested a lot in that part of what we do, which is a real big part of what we do even to this day, is making sure that these individuals, call it between the $2 and $20 million of net worth, are treated like they have $100 million of net worth. And so that was a big reason of how we started to attract clients. I said, first of all, I eat my own cooking, right? All of my assets are here. All of my family's assets are here. And that resonated with a lot of the local people and COIs that I knew in San Diego. So we had the fortune of quite a few clients that came over in the very early days, going from zero to a couple of $100 million of organic just by the people I knew in my area in Southern California. And when that happened, we said, well, I've gone through this growth phase that we had done at Altegris, and a lot of the ways we used to solve some of the issues from a scaling perspective was just to hire more people. And that is an important part of what we do today. But also what I realized, I didn't want to just do that. I wanted to have scalable technology. So I had learned from the kind of the good, bad, and ugly of what we had done at my previous firm is from day one, I want to have scalable CRM. I want to have a scalable client reporting tool. I want scalable financial planning tools. So we invested heavily in technology from day one. And that really allowed us to bring on those clients, but then it started to attract other advisors that were local who wanted to tap into the kind of plumbing that we had built, while also having access to some of these alternative strategies that we had kind of known for and knew and had on our expertise. So that allowed us to go from 0 to 200, then 500 fairly quickly, and kind of got the ball rolling pretty early.
Then off to the races. When you're putting that tech stack, I guess, together, with some of the plumbing. Were you, using some of the tools that we all know, or stitching things together on your own? How were you going about assembling that plumbing? Who were some of the folks that you went to?
Well, it started from, I would say, the what does a client want most? What do they need the most from an interactive perspective? And so that really goes to the client reporting tools. And so I did it myself and another analyst here did a pretty extensive dive into the tools of the day. This is 2015. All of them are still around today, actually. But each one of those has, their day in the sun, I'll call it, right? So every new client reporting tool, every 24 months or so becomes the leader, right? So you might have the best client reporting tool that can handle trusts with multiple beneficiaries, and that is the go-to client reporting tool for that day. But it doesn't have a great rebalancer, right? So the great rebalancing tool is another shop, and they do great rebalancing today. But guess what? Another one just launched, and 2 years later, they're the best rebalancer. So what I was looking for was a firm that was going to continually invest in upgrading their tools. And so we chose that tool, and that was we're using Black Diamond right now. And what I've seen from them is they've continually invested and upgraded to enhance the services and the kind of value out of that fintech tool. For us, just like anything else, out of the box isn't necessarily the perfect thing you have for your practice and for your business. So we have to customize in a variety of ways. And that same thing happens for us with our CRM, which is Salesforce. So out of the box, it's got a lot of potential, but you really have to put the time, effort, and money back into it to build it for your workflows and your practice. And we've done that across the board.
Sure. And this is what you mean by finding the plumbing that is scalable, that
Yes.
You're not just necessarily selecting the shiniest widget, but something that you and your team determine can integrate and scale and comfortable with the people behind it, and finding the tools that way.
Yes.
The organic growth, you're off to the races. Took an investment from Constellation Partners recently to, I think, using some of that money to begin to acquire. When did you make the decision to go from we're going to grow this organically to trying to scale up by bringing some other firms under the roof through acquisition?
Good question. So the thing that happened for us is as we continued to grow, we were taking every dollar of profit and putting it back into staffing and technology. That's been our mantra, my mantra since I launched the firm. And we got to a point where we were receiving inbound calls from other advisors that were interested in what we were doing, but also interested in not only using the investment philosophy, but the technology and tools and the workflows that we've created. And so opportunities started to come to us. We hadn't had any kind of reach out program that would say, let's do M&A today, and we're going to go after it in these different geographies. They started to come to us, and more of those started to happen. So we did an acquisition in Greenwich a couple of years ago, referred to us from another platform manager that thought this was a great fit culturally, philosophically, ethically. And it turned out that was very true. We brought in that firm, integrated that firm, and now that particular advisor is one of our leaders of our investment committee, incredible addition to our team. And then another one came around about 6 months after that in Denver, similar in that great team and talented planners, incredible portfolio managers that wanted to access our platform. And we started to have to put out some capital to do some of these acquisitions. And I realized that if we wanted to continue to grow and scale, it was going to be something that we kind of required was to have some capital on our balance sheet so that we could come from a place of strength, and then utilize that capital to go out and strategically look for talent in the acquisitions that we're doing. And that's kind of how we've limited the amount of acquisitions we've done, because we're not just doing acquisitions to do acquisitions for acquisition's sake. We want the talent that comes with it. And so I set out to go find capital, not necessarily knowing it was going to be purely PE, but I knew what I didn't want from a strategic investor. And so I set out to go look for one. I wanted a strategic minority partner that understood the space extremely well and was invested entirely in this space, right? They weren't going to be just doing financial services across the board. They were going to invest purely in wealth advisors, independent wealth advisors. Unfortunately, I had known of and knew the leader of Constellation, Carl Heckenberg, who is an incredible guy, who was putting together a team that I felt was exactly what we were looking for, and they've delivered on everything that they had promised, which is not only the capital but the strategic interactions that we have with them on where we'd like to take AlphaCore. They're hands-on but not hands-in, and that is a beautiful thing to have in a capital partner.
Yeah, no, and certainly a lot of experience there in this space and kind of grown alongside of it. You say that these are strategic acquisitions in the kind of the hunt for talent that's a cultural fit and finding the right partners to bring onto the platform. Do you have a kind of a roadmap for how acquisitions are going to play going forward? I like you say, I mean, I don't think you're looking to be a serial acquirer of other RIAs. You're really looking for the right firms, probably a slower pace than maybe some other firms in terms of acquisition.
I would say so. It's we have a very strong organic growth engine that we have. We have dedicated business development team on our staff. So we have 5 people now fully dedicated to generating leads from various lead sources. And with that comes this essential need that we need established high quality advisors to help service those leads. So that is an interesting place to come from when you're an advisor that's potentially looking to integrate or merge with a firm. They're looking for those types of services, not only the plumbing, which we've talked about, and not only in the investment side, but if you can provide them a growth engine over and above that, that becomes really exciting, right? So we look for, these core values. We actually have AlphaCore 7 core values that we have on almost everybody's desk in my offices, which help us align our values and our culture. And that becomes the filter. If you can make it through those values and you kind of resemble those values in your day-to-day, they're who we bring on, right? So if we're doing 2 to 3 acquisitions a year, that would be a home run for us as long as they're bringing on the right culture and fit. So it's exciting times.
What are some of the, just give me a few of those 7.
Yeah, sure. So the very first of the 7 is do what's best for the client. That's the number one value. So when you have that as the pinnacle, a lot of other things start to fall in, right? Because you can have debates on what's the best tax advice to give. And some CFPs will say it one way, and another will say it a different way, right? But if it's at the end of the day, if it's the right thing to tell the client, we're going to tell the client. Same thing on the investment side. If it's difficult to invest, but in a limited partnership because it's hard to track and it's difficult to put in the subdocs and getting the data back is difficult from the administrator, but it's still the right investment for the client, we're going to do it, right? So a lot of times that becomes the guiding kind of lighthouse in the storm. Do what's best for the client, right? Mm-hmm. The other 6 are really how we treat each other inside of AlphaCore, which is, I'll give you some of these and stop me if I'm boring you, David, here. But, basically work from the assumption that people are good, fair, and honest, right? Maintain a solution orientation rather than the problem orientation. The biggest one I would say that probably the most used is check your ego at the door, right? We've got a lot of experienced people here. I've been in the business for 25 years plus in some cases with CFAs, CFPs, KAYAs, you name it, a lot of acronyms that are very smart people. But when you're coming to join a team, we need you to check your ego at the door because we're all approaching it from a good place, right? The others are seek to create win-win solutions, practice blameless problem solving. And then the 7th is keep things fun, right? So we want people to like going to work. We want people to like being a part of the team. And so we'll do great team meetings. We do 2 all hands meetings, one in June and one in December, where everybody comes together, and we do some competitions, and we have an Alpha Award at the end of the year, which is the most valuable player essentially for the year.
That's great.
And yeah, it's pretty fun stuff.
How many employees?
We are just crossing up on 50 people now. We added a dozen over the last 6 months.
Okay. You've been an entrepreneur before, so this isn't new to you necessarily, but I did wonder if you reflect a little bit on, as you're building a wealth management firm, we see so many wealth management firms that are run by entrepreneurs, founders of the firm, broke away from Wall Street, hung out their own shingle, and sometimes as they grow, don't recognize their strengths versus what they're forced to do as a business owner. Do you reflect on that at all? Do you have some sense of what your strengths are versus what maybe they're not? Bringing in maybe client-facing financial advisors, maybe that's something that, a lot of people think, well, that's my role as the principal of the firm. How do you think about how you're going to distribute, I guess, responsibility across AlphaCore as you grow it?
That's a good question. And I think I have to look at the values of AlphaCore myself, right? To say, okay, I need to check my ego at the door. I can't do every job as well as some other people can do. So if somebody says, be introspective and look inside and say, why has AlphaCore been as successful as we've been so far? And what's the future? I've got to bring around more talented people than I am at their particular area of expertise. And so recently we just brought in a chief operating officer who's got 25 years of experience of really building scalable systems inside of larger firms. And that was a big step, right? It's a big step for anybody who kind of launches their own firm, an advisor that's the lead advisor that kind of does everything and has their fingers in everything from the planning side to the marketing side to the investment side. You've got to be willing to let go of the reins a little bit and bring in people that are better at that than you. And for me, that's been an evolution. But from the outset of AlphaCore, just given my history from the previous firm, I knew I wanted to do that. I wanted to have the capital to be able to do it, right? So that was another reason of bringing in a minority partner. And that's really allowed us to scale. And it gives the rest of the team the strategic vision for the future, for career pathing, for building out, somebody who wants to go from, let's say, operations to high-level customer service to planning to becoming a junior advisor. It really allows for that when you bring in the talented management team underneath. And so for me, the best use of my time is helping recruit those talented people, talking to our largest investors and potential investors, as well as any of the M&A opportunities we have. And so I'm intimately involved in that side of what we do, but I've really brought in more talented people than I to run the rest of it.
Can we talk a little bit about organic growth? Because I feel like the conversation in the RIA space has really turned towards organic growth over the past few years. Maybe it's because of the market's getting a little wobbly, some of the valuations that are paid for firms. There seems to be a renewed focus on organic growth over M&A. How do you approach organic growth, and how has that changed as you've gone from a $200 million firm to a $3 billion firm?
Yeah, it's that's a subject that's probably
we could have our own podcast about that, right?
Very near and dear to my heart. Yeah. So this is for me, this is coming from the world that I've come from. We really want to bring in growth-minded advisors and business development officers, right? So there are a few different ways to grow organically, and you've probably heard of them all, David, before, but I'll kind of reiterate. One of our biggest referral sources are our clients, right? If we do a good job by our clients, naturally they're going to give you referrals. You have to, though, teach the advisors and the biz dev team how to do that and how to ask for them. But that's a process that we go through when we bring on new team members, is to say, okay, if we're doing a good job for you, how do we win other business or referrals from you? We've actually built some marketing events around just that. We have these things that we call core connections. and they're really not to solicit business, in somebody's face. They're to bring clients together in somewhat of a client appreciation method, but they can bring their friends, their neighbors, their the people around them to come to these cocktail hours and hors d'oeuvre hours, and have an experience that's not a high pressure sales pitch. It's an hour and a half of getting together, talking to some of our clients, and that has really done well. We're doing that every other week or so across California, but now in other regions as well, in Denver and across the East Coast. That's one way to do it. We're also part of one of the largest referral networks, and that has brought in, you can utilize the same sort of event planning marketing techniques inside of that channel, right? So that expands. As you start to do this, you can get scale just from those types of events.
Is that a custodial network?
Yes. And that can be that can overwhelm a firm, by if you get to be a part of those and you're lucky to be a part of those. That can be its own. You can build a multi-billion-dollar RIA just on those referral networks, but you also don't want to be beholden to the referral networks, and you want diversification across your organic lead sources. The other is we do, and we're doing one next week. We have what we call the AlphaCore Wealth Summit that brings together. This year we'll have about 400 people at it here in La Jolla, California, where we're doing client education, where we'll have panels of managers, panels of estate planning, panels of charitable giving, biotech and life sciences. So clients will come to that, and also prospects will come to that. And we've added this year kind of another piece to that, which is other wealth advisors are starting to come. So we put together this piece, which is not just client education or prospecting. We've added this other component now, which is client appreciation, and we actually have a band that's going to play that night called the Fab Four, which is a Beatles cover band. So we're trying to combine these events all in one to make it something that clients want to go to. They want to bring their friends to it, but they also can have some fun.
So when you're making hiring decisions inside the firm now, where is the emphasis? Is it, you use the word business development, which is frankly not a word that I hear from RIAs a lot, right? Kind of a professional business development department, not just marketing, but business development, and kind of separating that a little bit from the actual financial advisor or the wealth planner. How do you balance those two things? I mean, if you're looking to make a hire, if you had to make a hire today, what would be your one need, and where would that person sit?
It's a good question. So that evolves as we grow. So we typically try to staff in advance of the growth. So what we did in the last 6 months is we really bolstered up more customer service and operations personnel. We hired, I think, about half a dozen people in that area, so that as the clients would come in, we weren't missing the beat on the existing client base to make sure they still maintain high-level customer service, right? That's part of the limiting factors for growth and scale that I think you'd hear from any of the, kind of growing our advisors, is making sure existing clients still get the best of kind of white glove service that we want to offer. So that was the first thing we did over the last 6 months. We then said, okay, well, if we're going to be in these other geographies, and bring in other advisors, we want to make sure that they can continue their growth path. And that's where this business development concept comes from. Is there are different types of people in the world, as you know, David, right? Some advisors are incredible at advising and doing the ongoing, I guess, psychology work that needs to happen with an individual client. But they're not necessarily the person that goes out to a bar and meets the person next to them, and all of a sudden they become a lead for them, right? So, but what we want to bring in is bring those two personalities together. So if we can hire somebody in what I'll call business development that has that type of personality that can bring the client in, but isn't necessarily the best at being a great financial planner or advisor, let's put those two together and really have a 1 + 1 = 3.
Yeah, it's that realization I think that a lot of RIAs make, where the rainmaker is not necessarily the best wealth planner, right?
Yeah, that's right.
And it used to be that was the same person. It also strikes me that you have an interesting differential in the investment with what you do with the investments. And this is another thing that I think, how many years did we hear about the 60/40 portfolio being, commoditized? Yes, but also not the thing that advisors really bring value, right? Like the financial advisor should not be juggling the knives of the investments, because that's not where their skill set is. Their skill set is in this sort of psychological work on life planning and this sort of thing. And all that's certainly true. However, you get a bunch of RIAs out there who have a sea of sameness when it comes to the investment options that they have. And I think particularly for high net worth, upper high net worth clients, that's not enough, right? I think your summit is a good example of this. These clients have an interest in the world, and part of the way that they express that interest in the world is through, seeing what's going on in biotech, seeing what's going on in real estate, seeing what's going on, and interacting with that through largely investments, right? So an investment philosophy as a differentiator for an RIA is something I think that you've consciously built there. But do you reflect on that at all? Does that resonate?
Yeah, it definitely does. And like I said, it comes from the origin of, even launching, because as an individual client, this is what I was looking for. But I didn't want to settle for the other side either. I wanted both sides. I want the best of both worlds. I want the best in investments, and I want the best in wealth planning. And that's not an easy thing to conquer, right? Some advisors are incredible wealth planners, but they take a back seat on the investment side, and vice versa, right? You hear some incredible investment shops, but they miss it on the planning side. And you really need both, because if you don't have that, you might do an incredible job at investing, but you missed it on the tax planning. So you just negated everything you created on the return side. And then the same thing happens if you do incredible goals and objectives and do deep dive planning, but then you solve this with a rudimentary 60/40 or rudimentary portfolio, and unfortunately you go into a drawdown from day one. You've got this sequence of returns issue that you've got. So you've got to blend the two together. And to your point, David, as you go kind of up the food chain from a accredited investor to a qualified purchaser to even higher, more and more they've got the ability to take on some longer term illiquidity, which means that they can handle private equity, which should have an illiquidity premium. They can handle private credit or private real estate, or venture capital, right? There's a whole host of things that you can now have access to, and high quality access to, that you didn't even have 15 years ago. So to me, these are the things you have to have in a portfolio. It's, I call it the third leg of the stool, right? You have the stocks, you have the bonds, you need this third leg of the stool in alternatives, and you need to do it really well.
Yeah. I have, we're getting the hook here from our producers. I've got a ton more questions. You definitely have to come back. I'd love to speak to you a little bit more about the alternative investments and how that's evolved. I've got a ton of questions about that, but I just don't think we have time right now. So
Yeah.
This has been fantastic. Thanks very much for the conversation.
Of course, David. Anytime, I'm happy to. We could spend hours. We could spend hours on that side of it. It's been an ever-evolving world, and it's, at the end of the day, been very good for the end client, because they're getting access to better and better best-of-breed managers.
Yeah, it's fascinating. It's fascinating to me. Well, thank you very much for joining us, Dick Pfister, founder of AlphaCore.
Thank you very much.
And you've been listening to the RIA Edge Podcast.
Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.